Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Investing comes with risk. No matter how safe an investment sounds, there are risks involved. To read more about it, please see the description below. And if you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. While you're there, you could also sign up for some free special reports that we offer to our readers, and they get delivered to your inbox. Industry tailwinds are making alternative banks like today's income pick, Trinity Capital Inc., traded on NASDAQ under symbol TRIN, increasingly compelling. In just a year and a half, the Federal Reserve has raised its interest rate 11 times to a range of 5.2% to 5.5%, the highest since 2001. At the moment, chances are good that the Federal Reserve will not raise its rate much higher, but it does expect borrowing costs to remain high for years to come. Analysts are forecasting interest rates will remain above 5% in 2024, and by end of 2025, they could be around 4%. That may not sound all that high, but that's roughly double where they were at the end of 2019. John?
Yeah, thanks, Mo. Inflation will eventually be tamed and more historically reliable economic growth will return. But Wall Street expects borrowing costs to remain well above pre-pandemic levels for years. Why? Well, in spite of 11 rate hikes, the economy remains entirely resilient. Back in early 2022, analysts were predicting that even a few interest rate hikes would tame so-called short-term inflationary fears. But it didn't. If anything, the aggressive rate hikes have proven that the U.S. economy is strong and may be able to handle higher borrowing costs for, time to come.
Yeah, this is certainly bad news for people with credit card debt and mortgages, but it's good news for business development company or CBDs like Trinity Capital Inc.
Yeah, Trinity Capital is a business development company that provides term loans and equipment financing to growth stage companies. Now, a growth stage company is defined as having active equity sponsors, earning annual revenues up to $100 million, and being past its risky early development stage. Trinity Capital has a successful track record, actually, of serving multi-billion-dollar underserved niche market. Now, since its inception in January 2008, the company's made 298 investments and 171 exits. As of the second quarter of 2023, Trinity Capital Inc.'s investment portfolio had an aggregate fair value of about $1.2 billion. The company has backed some of the world's most innovative companies. Its current partners include Axiom Space, Grub Market, Impossible Foods, and Nexus Systems Group. Now, three companies that Trinity Capital was an early investor in include Maxwell, Lucid Group, and Matterport.
In the second quarter of this year, its total investment income jumped 37%. Could you elaborate on that?
Yeah, things are going really well for Trinity Capital. For the second quarter ended June 30th, Trinity announced that total investment income jumped, as you said, 37% year over year to $46.0 million. Net investment income grew 40.8% to $22.1 million, or 61 cents per share. Now, during the second quarter, Trinity originated approximately $218.5 million of total new commitments.
And the company increases base dividend for 11 consecutive quarters?
Yeah, thanks to its strong, outstanding performance, it has been able to increase its base dividend for 11 consecutive quarters. On September 13th, it announced a third quarter cash dividend of 54 cents per share. Now, this was made up of a regular dividend of 49 cents per share and a supplemental cash dividend or special dividend of 5 cents per share. Now, this is up from the second quarter of 2023 payout of 53 cents per share, which was comprised of a base dividend of 48 cents and a special dividend of 5 cents per share. Again, its current dividend payout is $2.16 per share on an annual basis for a yield of 15.27%.
And John, let's talk about Trinity stock. How is that doing?
Yeah, you just don't want a company that provides a juicy dividend. You also want a stock that's doing well as well. We actually looked at Trinity back in March. If you recall, this was when the Silicon Valley Bank said it was forced to sell securities at a loss to manage lower deposit levels and higher interest rates. While the sale only affected those customers who had money in that particular bank, investors feared that those underlying weaknesses could be undermining the bottom line of other banking stocks in the broader banking industry. As a result, knee-jerk investors kicked banking stocks off a cliff. Now, before the March 11th sell-off, Trinity Capital stock was actually up roughly 30% year to date. but due to the broad-based sell-off, Trinity stock's year-to-date performance was reduced to just 2.9%. Now, the sell-off made 0 sense. Trinity doesn't hold any deposits or securities or maintain any accounts or credit facilities with Silicon Valley Bank. And just days before the Silicon Valley Bank dam burst, analysts at UBS adjusted its price target on Trinity Capital to 16 per share from 13 per share. Now, Trinity Capital Inc. stock rebounded quickly, but was a victim to additional negative investor sentiment. Again, it was unfounded. Eventually, though, saner heads prevailed, and investors finally remembered or clued into the fact that Trinity had an exceptional 2022, and analysts were bullish on its stock in 2023. On August 3rd, it hit a new 52-week high of $14.79. Now, that represents a 30.5% increase over our March 2023 profile price. Now, Trinity stock has given up a little bit of ground to some well-deserved profit taking, but it continues to trade near $14 per share, actually. And as of this recording, Trinity stock is up 42% year to date and 28% year over year.
John, thank you so much for your analysis. Just to recap, Trinity Capital is a great BDC that reported an exceptional year of growth in 2022. It has continued that momentum in 2023, and that's one reason why TRIN stock was able to rebound and rip to a new 52-week high so quickly. In word of Kyle Brown, company's president and CEO, Trinity is operating on all cylinders. We have a healthy portfolio, solid balance sheet, and ample liquidity heading in 2023. The company's strong performance has also allowed it to increase its base dividend for 11 consecutive quarters and provide a reliable special quarterly dividend as well. That's it for today. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.